Traders are bracing for the possibility of another volatile day on Wall Street. It comes after yesterday's triple-digit drops across all three major markets. The open was relatively flat this morning. The Dow dropped slightly at the opening bell. So we're taking a look at the market. It's down about 235 points, but it's the beginning of the trading day. We're going to talk to our business analyst, Jill Schlesinger, just about what happened yesterday and what she sees coming for the next couple of weeks and months. In fact, Jill Schlesinger is joining me here in Studio 55 to talk more about this.
I put my shoes on.
Good to see you. I mean,
Good
hey,
Lord.
This is the kind of place where we do that, Jill. It's streaming. Everything is good. Everything's cool here. We're young. We're hip. We're with it. That's the bottom line here.
Except for this guest.
All right, so let's talk about what happened yesterday.
Oh, gosh. It was rough.
Yeah.
You know, it was a big sell-off. It's always scary when these sell-offs occur. 2%, 2.5% for the large stocks, 4% for the NASDAQ. That was the worst day this year. It's actually the worst single day since September. The NASDAQ, the big conglomeration of all these technology companies, that actually has seen a correction, down by more than 10%, actually down 13.5% from its high at the end of last year. But where we are is essentially that the world of investing is made up of human beings. Breaking news. And those human beings are feeling a little freaked out by the on-again, off-again tariffs, retaliations, cuts at the government, and it is making people feel concerned enough that we could see the economy slow down.
So we should point out to our viewers, and you and I have talked about this, that the stock market is not necessarily the economy. But as you know, if there's optimism and enthusiasm and stocks are going up, then people feel good. It's a sentiment that abounds not just with investors, but with businesses as well. In contrast, when we see a bear market or when we see a downturn in the market, people get pessimistic. We've started to see, for example, retail stocks that are not doing so well. They're missing their targets, Walmart, Target, because they're doing business. Most of their stuff is made in China, right? So if this turns out to be a correction, what does that portend for the economy and GDP?
You know, okay, so you're right. Two different things, right? What is the economy? When we say big picture, all we're talking about is the government tallies up all the goods and services that are sold. And we get a number, and that's the gross domestic product. And when the number goes up from year to year, that's an expansion and a growing economy. And if it shrinks, that's a recession. That's bad. Now, the reality is, when you think about like where we are with the stock market and the economy, you're right that usually stocks would rise in a growing economy, right? Because you sort of get the wind at your sails and people are feeling good. They have jobs, they're getting wage increases, they spend money, companies make money. But there have been times where the two diverge. In fact, it happened recently. In 2022, we had the U.S. economy growing, grew by about 2%. The stock market got hammered. It was down 20% that year. And so a lot of what we're talking about when we talk about the stock market, the economy, they are separate. They can lead to feed on one another. And what I think you're talking about is that when people feel good about the stock market and it goes up, we have something called the wealth effect. Hey, my 401k is going up. I have a job. I feel good. That's awesome, right? And maybe I'll spend a little bit more. But it doesn't always work. And by the way, only about 60% of Americans own stocks at all. That might be shocking for a lot of you, especially if you've been like one of those people who jumped in the stock market during the meme stocks or you started to play with Robinhood. You know, there's a whole group of people who have zero investments. So they're much more concerned with how's the economy doing? And right now, the economy continues to grow. But again, we're fearful that it could slow down. And, you know, we don't worry about a recession like overall, like, oh, my God, it's the worst thing in the world. There haven't been that many. But when you have recessions, what we're worried about is job losses. And as someone liked to say, I think it was maybe Warren Buffett or someone like that would say that, you know, what is a depression? It's when you lose your job. A recession is when someone else loses their job.
Right.
So, you know, when we see job losses, it can really harm us. It harms our ability to spend. And of course, it affects us emotionally.
So before you go, Jill, I want you to give, and we don't give advice here, but I want you to sort of put some perspective on people who may be thinking about their own personal finances. I've just watched over the last 24 hours MAGA faithful Trump supporters trying to spin the fact that the market has been coming down over the last couple of weeks as a good thing. I saw Senator Tommy Tuberville say that he thinks that the stock market was too high under President Biden. This guy doesn't know anything about stocks. He's a football coach. I know he knows everything about football, but I think it's interesting that people are trying to spin it politically. If you are an investor and you're listening to the noise, either people telling you that it's a great thing that the market is going down or people telling you, hey, look, these things happen, these corrections happen, what should you be doing?
Okay, so first of all, stock market going down is normal. There's nothing really good about it. It's not pleasant. It's sort of like, I want to get sick. Like sometimes you're going to get sick and that stinks. You're going to get better.
Right.
So we don't say it's good to be sick.
That's right.
I think that if you're looking at the markets and it unnerves you, it's nice to go back to your basics. So the thing I think really does soothe most of us is to take some action. And so one action item would be like, hey, let me just make sure, do I have 6 to 12 months of my living expenses in a safe account? Have I pulled money out of the market that I need to pay a tuition bill, or I got to buy a car or a home down payment? Is that money out of the risky stuff? Also, have I started to whittle away at my debt, my credit card debt, my student loan, my auto loan? And if those things are all in line, hey, let me look at my retirement account. That's long-term money. That's a good way for me to put some money to work. Maybe I can knock up my 401k contribution by a percentage point or 2 percentage points. Those are things you can do. But also, I want everyone to remember that if you are investing, it's for the long term. There are going to be downturns. There are going to be upswings. You usually can't get a lot of up only. You get up and down.
That's right.
The good news is, as you know, you were in the investment business for a while. This is like one of those classic things. You know, it's crazy. Stocks go up 70% of the time, but you really have to stay in it. You can't get in and out.
Good point. Jill, always great to have you. Shoes or no shoes. Love having you here all the time. Thank you very much.
Thank you.
Let's continue this conversation with CBS News White House reporter Olivia Rinaldi. So, Olivia, the president obviously watches the stock markets intently. I recall during the first Trump administration, every time the market went up, he would tweet about it. He would suggest that this is the greatest thing that's ever happened. But now, in the second Trump administration, he's asked a question about a recession. Is there one coming? And can you say to Americans that there won't be a recession? And he says, I don't think I can say that. So how is the administration trying to frame this?
Yeah, Vlad, certainly this is a president that likes to celebrate those market wins, and this White House is downplaying that market sell-off we saw yesterday. A White House official told us they see a strong divergence between what they're calling short-term animal spirits of the market. That's that bear and bull market that's really associated with those market rises and market sell-offs, and what they're seeing unfold from businesses and business leaders, saying essentially what they're hearing behind closed doors is that people are excited about that economy that Trump is going to create, and they're excited to come to the U.S. and make and build their companies here. But that's certainly a bit of a divergence from what we're seeing, what Americans are seeing and feeling happening in the stock market right now. Kevin Hassett, who's the White House National Economic Director, also told CNBC yesterday that there's a lot of reasons to be bullish about the future of the economy, but there are going to be some blips in the data that we're going to see, particularly over this next quarter, the first 3 to 4 months of this administration. He said that there's going to be small squeaks of positive data, and then they're expecting that the second quarter there's going to be a large boom of businesses. And Vlad, that's really what this White House is counting on. They think that combined with these tariffs, potentially Trump's tax cuts that could be put into law again by Congress. A reminder, that's also something they need to do in addition to funding the government, and that's coming up this week. But in addition to all of this, it's going to create economic conditions that's going to lead to a boom later. But as I point out, and as Jill just pointed out, Americans are feeling the squeeze right now with this market sell-off and with all of these tariffs that are really uncertain. Americans are feeling that squeeze, and that's certainly reflected in the data.
Let's talk about those tariffs, because I think if you're not keeping up to speed with all this, it's hard to know where we are, because every week the president changes his mind. First he says tariffs are coming, then he says he's holding off again. Then he says they're coming, then he says they're holding off again. So we know that more are on the way. We know that China has implemented tariffs on certain goods, and that is certainly going to hurt American consumers. I pointed out to Jill that some of the retail stocks are doing poorly because they're missing their earnings targets, primarily because a lot of their crap is manufactured in China. So what do we think is going to happen before they actually take effect? Where are we with regards to Mexico and Canada, and what is the president saying about the tariffs to come?
Well, Vlad, I'm really glad you brought that up and the back and forth about all these tariffs, because Trump just announced more tariffs against Canada coming tomorrow. He says this is in response to Ontario saying they're going to place a 25% tariff on electricity going to the U.S. He just announced on True Social that an additional 25 to 50% tariff on steel and aluminum coming into the U.S. from Canada, and that will go into effect tomorrow. So you talk about this seesawing, this back and forth that we're seeing in this trade war, and it's hard to keep track of exactly what product is tariffed at what level it's tariffed at, if it's on a pause, if we're going to see reciprocal tariffs. So this just breaking, this will be going into effect tomorrow. So important to be watching any companies that could be impacted by this. I'm thinking home ownership, I'm thinking Home Depot, Lowe's, any of those types of companies, retail companies that will certainly be impacted by this. And I also want to point out we're about 22 days away from those reciprocal tariffs going into effect. Those will happen on April 2nd. And those are not just happening to Canada, Mexico, and China, but to all countries that Trump says levies a tariff on U.S. goods. So maximize what's impacted right now by tariffs by a couple of trillion. And that's what we'll be seeing in 3 weeks. So a lot of this uncertainty, a lot of this back and forth, we know there are conversations going on between this White House and Canada and Mexico about how to lessen these tariffs. And Trump says he wants to see more done on fentanyl specifically. But to all of those countries that will be experiencing tariffs in 3 weeks, what does Trump need to see from them to get those tariffs perhaps pushed off, lessened, and the ultimate question of how this is all going to impact Americans and their pocketbooks as well.
All right, Olivia Rinaldi breaking it down for us. Thank you, Olivia. Appreciate it.
Thank you.